Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. We have a special guest joining us today, Ed Steer, the author of Ed Steer's Gold and Silver Digest. Ed, great to see you.
Glad to be on your show again, Ivan.
Awesome. So, big news, the COMEX this week for silver finally got under 100 million ounces registered. So, how much longer can the manipulation go on, Ed?
I'll tell you what, this is a $1 million question. Not only I'm asking, but everybody else. Silver analyst Ted Butler, who's been at this for 37 years now, which is an awesome amount of time to have spent on examining the silver market. He's expected this thing to be over a long time ago, but it just keeps dragging on and on. But no manipulations last forever, especially ones that are as fully out in the open as this one. And from a commitment of trader standpoint, as he mentioned in his column on Saturday, we're in the best position for a moonshot that we've been in at least the last 2 years. So he's kind of hoping this is it, as well as you and Jim are.
But we've seen so many other commodities. I've seen people on Twitter, sort of sarcastically post a list of every commodity and how its 1 year performance is, and most of them are up 50 to 100%. And then poor silver and gold are down 7% or something silly like that. Does this surprise you that every commodity seems to just be going ballistic, but gold and silver are not participating?
Well, it's only a surprise for people who don't understand the fact that the precious metal prices are being actively managed. If you look at it through the lens of price management by certain bullion banks, then it makes perfect sense. But as far as inflation goes, whether the commodity be natural gas or aluminum or stainless steel, you can pick whatever commodity you want that's up on the year. The only three that aren't are gold, silver, and soybean meal. So, so the thing is, anybody out there that knows that the prices are being actively managed, silver and gold should be many, many multiples, I don't know, 5 or 10 times what they are right now, as far as I'm concerned, if they weren't being actively managed.
Well, how do you answer, in the comments of all our videos, I always see people making that sort of sarcastic, snide comment of, why bother with silver or gold? If it's actively managed, why don't we go somewhere else, until the manipulation ends? I mean, what's the logical answer for the sarcastic comments out there?
I can tell you this, when the silver manipulation, gold manipulation ends, if you're not in a day early or a week early, by the time it ends, it's going to end with a bang. It's not going to end with a whimper. We're going to wake up some morning and silver is going to be jumping up $10 an ounce at a crack. And try to find an entry point there, and I wish you luck. So, if you've got to be in early. You've got to have because I can tell you right now, the moment that prices start moving like that, the physical market will dry up, and you won't be able to buy it at all. We're same with the shares as well, because once the silver price starts to go, then the shares are going to go astronomically higher in a heartbeat. Like I said, good luck trying to find an entry point when that happens.
Yeah, I remember back in late January, early February, when in another lifetime, Ivan started all this mess. I've heard you say on another interview, it's a mile long, but an inch deep in terms of the retail supply out there. And when you've got tens of thousands of stackers, or that's just the ones on Reddit, but they can clean out the retail sector in a weekend. It's just there's no depth of inventory. And I've heard you describe that before. I'll let you comment on it. But have they rebuilt that inventory, or are inventory levels still a little bit stressed from last February?
Okay, my comment was this retail supply chain is 50 miles wide, 100 miles long, and an inch deep. And so you got it right. Having worked in the retail bullion industry for 4 years, I know what I speak. And most suppliers have been able to replenish their inventory to a certain point. They're still not at levels they want to be or like to be. The product isn't available across all product lines from all the mints. and you can pick any mint you want, or go to any website you want, and you'll see there's delays, 3 weeks, 1 week, whatever, for whatever product to come in. So they haven't really rebuilt the supply line. And like you said, we see a spike in the silver price, and I can guarantee that within a weekend or 3 or 4 business days, the supply lines will be back to a month, 2 months, 3 months in a New York minute. It's that thin.
So Ed, there's collusion between the banking systems and the actual treasury departments of the largest governments in the world. So are they trying to prevent people seeing the inevitable?
Well, I wrote in my column on Saturday, this price management scheme's been going on since, well, we went off the gold standard in it was August 71.
Mhm.
And there's been an active COMEX futures market in gold since, I think it was January the 1st, 73. And they said that, well, we got to suppress precious metal prices or people are going to be seeing inflation. Well, now they want inflation in the worst way, as you can tell from the way that other commodity prices are acting and the way they're talking at the Fed. And they've got this price management scheme now, which has been going on for 50 years. And they never thought at the time when they instigated it that they would actually have to end it, or if they were going to end it, how it was going to end. Well, they've left this thing to the very last minute. So if they want runaway roaring inflation, it's, the fact, like you pointed out, silver and gold are the only 2 major commodities that are up on the year, and everybody's starting to ask questions about it. And they're trying to figure a way out of this, and they desperately want to get out of it. And I think that what we've been seeing over the last year or so is their attempts to head for the exits. It's not unfolding. The end is not as unfolding as fast as we'd like it to. We want it to end like right after lunch, sort of thing. But they have their time frame. I think not only are the bullion banks up in this, like you said, I think the Fed's involved, the Treasury Department, various banks. The Bank of England would be another one that would be involved in this. This is, it has the potential to bring down the financial system. And so they're handing this kids' gloves, and we just have to wait it out.
I just saw this quote this morning from one of the Fed board members, one of the voting members, Evans, where he's ridiculously saying he thinks inflation will be 3 or 4% this year, but he doesn't believe it's a monetary policy issue, which I found. Here's my sarcastic response. Number one, that he thinks it's only going to be 4%. And number two, he doesn't assign any blame to the Fed for any of this. I don't know. How do you react when you see ridiculous things like that, Ed?
Yeah, well, that's a nice softball question. I'll put it this way. Inflation's already in excess of 4%. I have no idea what the number is, but it's way over that. Mm-hmm. And I can't remember what economist was. Was it Milton Friedman, who's way back when said inflation is always a monetary phenomenon, and the more you print, the higher prices will go because there's more money chasing fewer goods or the same amount of goods. And the inevitable effect of that is rising prices or inflation of one kind or another. And since we're already well past 4%, inflation is going to turn into superinflation, which at some point is going to turn into hyperinflation, which is the destruction of the currency involved, which in this case is the US dollar. Not only that one, but inevitably at some point, all fiat currencies are going away the dodo bird.
Well, it's kind of interesting that they keep trying to talk it down because, in the 1970s, the way they stopped inflation, of course, was Paul Volcker raised it to 20%. You got to get short-term rates above the rate of inflation to stop inflation. But if we're at, their number is 5%. The shadow stats number is closer to 10 or 12%. I don't think anyone in their right minds thinks that the Fed can raise short-term rates to, 15% to stop inflation without something calamitous happening. How do they stop it? Is there any way possible to stop inflation this time?
Not at all. They've painted themselves into a corner, and I think that with they're not saying the word, but as far as I'm concerned, that the destruction of the U.S. dollar is their goal in this, and the destruction of the American Republic. If you read G. Edward Griffith's book, The Creature from Jekyll Island, there's no way they can raise interest rates even to 5 or 6% because that would blow up the bond market and the stock markets, and as I've said many times over the last 10 years or so, if they did that sort of thing, the world's financial and economic system would be a smoldering ruin within 5 business days.
Yeah, and I think it's even worse than the 1970s. In the 1970s, they didn't have all these derivative swap markets leveraged against all the underlying debt. Now we have these, as Warren Buffett called it, these neutron bombs of derivatives linked to all this debt. So, a spike in interest rates by a couple of percentage points, someone is the counterparty on all those trades. So how many banks or hedge funds would just blow up at a 5% short term? I mean, it's unknowable, but we all know what happened in 2008, right?
Yeah, well, the financial system would melt down and would freeze up, and that would be the end of it. And we came close to that back when the long-term capital management days. Mm-hmm. And also again in like 2007, 2009 financial crisis, if they hadn't stepped in and done something, the system would have frozen up, and that would have been the end of it. And if they keep going the way they are doing right now, we're going to see that event unfold here at some point. And Klaus Schwab's Great Reset will become a reality. And I don't know what they're going to usher in, but it certainly looks like that the destruction of the current system is in the cards for them. And what we're going to get from that, and when it comes, who knows?
Some of the big news I saw recently was India's gold imports are surging. And I'm sharing a recent article on the screen right now. And if I scroll down here, imports have jumped to 91 million tons versus 12 tons a year ago. When I see governments like China, Russia, India, they don't seem to be playing the same game that Europe and the United States are playing. And are they just trying to get ahead of this? You think they're planning for the reset and they want to have I'm sort of setting you up and giving you your answer, but I'll let you give your own opinion on this question.
Okay. This story, as a matter, you posted it, and I said, "Gee whiz, did you get it out of my column?" But no, that was in my column this morning.
Oh, was it? No, I didn't see that.
No, I know that. Yeah, but it was in my column this morning, and India, the people of the Far East, the Middle East, the Chinese, I don't care what country is, gold and silver have been money to them through all of recorded history. And in a lot of these countries, the people there, their banking system is basically gold and silver because they don't have bank accounts of any kind. So tradition in countries like Vietnam and India and China is to, buy physical metal, and it's on sale. The banks have put it on sale for the good folks in India. Their wedding season, marriage season is here now. And at these prices, it's a bargain. So I'm not at all surprised to see that this number as high as it is. And the matter of fact, next month, if they keep prices low, it could go even higher than that. So, Russia is up to 3,000 tons of gold in their vaults. That's what they say they have, and I believe that number. But China is a real wild card. They could have pick a number. I mean, they haven't reported their official reserves now for more than 10 years. And I've seen numbers of 20,000 tons out there. And if you look at the imports or the withdrawals from the Shanghai Gold Exchange and the amount of gold that's been imported into the country over the last 10 or so years, it's a 5-figure number of some kind. They're reporting 1,900 tons right now. But one of these days, the world's going to wake up and find out that China has what they say, who has the gold makes the rules, and they'll have a lot of it.
So one of the things I saw you talk about recently was the 1,000-ounce silver bar market. And I want to show you, and that's a totally different market than the retail market, what most of our Reddit community buys. These are, this is a graph that one of our guys on Reddit creates. His name's Ditch the Deep State. And he tracks PSLV's inventory versus SLV's inventory versus COMEX registered. And, the main ETFs like SLV and COMEX's registered inventory, they all have just been drifting down, 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 and PSLV is going up, 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 although it's gone flat the past couple of months. How should we interpret this type of data? Is SLV just not responding the same way PSLV does?
Well, the thing is that I have different graphs in my column than you see here, which I post on the weekends. And if what you're seeing is you're seeing a quiet drift down in gold. But if you take a look at silver in total, I'm not just talking about PSLV or SLV. I'm talking because I have my hands on the data for all of the depositories in the world that hold silver and gold. And just setting this chart you got here aside, I can tell you this, that since this engineered price decline that began in, what's it, January, February, since we hit the high,
Mhm.
the amount of gold that's gone into all the gold funds has declined slightly.
Mhm.
But the amount of silver that's gone into all of silver ETFs, including PSLV and SLV, the ones you're showing there, and the COMEX, that has actually been rising over the same period of time. There's no sign anywhere in either in any of the gold funds or any of the silver funds that we've had a precipitous engineered price decline in either gold or silver, and people are still packing this stuff away in 1,000-ounce bar form across the board in all SL ETFs and mutual funds. So if you look at the total picture, that's the way it is. So people are buying this stuff and hanging onto it with both hands and both feet. And so you have to look at the picture in total, not just those three funds. So
Gotcha.
as far as I'm concerned, the physical market for 1,000-ounce bars is just as strong. And the work that Ted Butler's done on this indicates that it's as tight as a drum in the 1,000-ounce bar market too.
So Ed, let's talk about Evergrande. Do you think that situation could affect the precious metals market?
There's a lot of things out there that should have affected the precious metal market a long time ago. And I'm talking about not last year or the year before, 5, 10 years ago,
Mhm.
if it was allowed to trade freely. But it's not. The Evergrande situation is, man, it's could turn into a real serious situation. I don't know if China has got the wherewithal or even the money to prevent this thing from melting down. I saw a story on Zero Hedge this morning that says a second development company missed a bond payment, and that
Fantasia.
rattled the market. What's that?
Fantasia.
Okay, whatever the name. I
Yeah.
didn't read the whole story. I just skimmed the headline. It says, okay, fine. There's another brick in the wall. It has huge potential. The biggest Ponzi scheme in the world is these sovereign wealth funds in China, of which Evergrande and all of these property developers are poster boys for.
Mhm.
And the chance of a meltdown in China is extreme. And will that help gold and silver? I don't know. You'd have to ask the bullion banks to see if they're going to allow it or not, because as you know, it's neither one of them is gold and silver allowed to trade freely.
A lot of the speculation online on Twitter and on Reddit has been most individual investors in China, they don't have the same access to the markets as we do, and so property investing is sort of like the main outlet for them. And people buy apartments, even apartments that aren't used, but because they still go up, or at least they have the past 2 decades. And the thought is, if they all get scared now about the property market, where does that outlet of investing go to? And it might be precious metals, just based on history. And China does encourage gold investing among individuals. So
Sure, that's entirely possible, Jim. I'm not saying that it isn't, but we have to see that meltdown first. We haven't seen any indication of it. There are some people panicking over there, and if I was Chinese, I would certainly be headed for the exits a long time ago.
mhm.
And will gold and silver be beneficiaries? I would certainly think so. But they can buy as much as they want, but it's not going to affect the price, because that's set in the paper market in the COMEX futures market. And until that changes, I don't care what the demand is everywhere else. It doesn't matter.
So Ed, you have to be prepared and basically get ahead of this crisis that's coming. So is now the best time to enter the precious metals market?
Well, I'll tell you what, I've been invested in the precious metals market since about 1999. So it's
Mhm.
been more than 20 years for me. I say in my column every Saturday, I'm still all in. So I've been all in for.
Long time
let's
stacker.
let's not talk about it. But having said that, I bought silver like at $5 an ounce, and I think I bought Wheaton Precious Metals, the stock, for $1 a share or 95 cents or something way back in 1999. So I've been hanging on to a lot of this stuff for a long time. So I should have been in something else, maybe cryptos or whatever. But I turned 73 the day before yesterday, and I'm old school, very much old school. And for me, silver
happy
and gold.
belated birthday.
Okay, thanks. For me, silver and gold are the ultimate stores of wealth. They've been money and stores of wealth for all of recorded history. The Vietnamese know it, the Indians know it, the Chinese know it, the Russians know it. Everybody in the Middle and Far East knows it, and I'm still steeped in that tradition from my time. My grandfather taught me all about this stuff. So, it's going to be here long before all the fiat currencies, after all the fiat currencies are gone, and there's no time like right now, because like we talked about earlier, once this price is allowed to trade freely, I can absolutely guarantee you won't be able to buy an ounce of anything. It just will not be available. So if you have the time, the inclination, there's no better time than to stick your foot in the water and go for it. And while I'm talking about that, I want to congratulate you guys on just an absolute fantastic job you've done. I think you're up to 159,000 apes now.
157, almost there.
157. But I can, I post the link to your website in my column every single solitary day.
Thank you.
And and I would tell you right now, it's the number 1 or number 2 read in my column every single day, because everybody wants to look at everybody else's silver.
Yeah, we've got lots of pretty pictures. That's what, or we call it silver porn.
You guys are great. Good for you.
Yeah. So, final wrap up question here. If I've seen that the palladium market's really been manipulated. Palladium already did that sort of moonshot when they lost control of it a couple of years ago, but they seem to be hammering that one down now too. And I know you follow that market. Any thoughts on what's going on in these other? There's the main gold and silver precious metals market, but platinum and palladium seem to be getting taken to the cleaners right now also.
Okay, well, the banks are short in all the precious metals: gold, silver, platinum, and palladium, and they're trying to get out of all of them. They're out of palladium right now. I deal with this in my Saturday column once a week, and I go into I spend 2 or 3 paragraphs on platinum and palladium and the Commitment of Traders report on them as well. It's very brief, but it's far more than you'll get anywhere else. But they're hammering these into the dirt as well, and they're going to be heading to the moon and stars along with gold and silver, because you can't have silver and gold going to the moon and platinum and palladium sitting there. They're both screaming buys as far as I'm concerned from a COT report.
Yeah. Well, Ed, I want to really thank you for giving us some of your time. We really appreciate it, and I know our audience loves to hear from you. Your last video with us, did something like 35,000 views when I think we only had 15,000 subscribers back then. And you got double the views compared to our subscribers. So, our audience loves you, and we just really appreciate you coming on and sharing your knowledge with us.
Well, thanks for having me on, and all the power to you guys and to your apes out there, because the people at the margin really do make a difference. And I can tell you right now, having been around this business for the last 20 years, you guys showing up at the end of January changed everything, and now you're up to 157,000. And so trust me, you are making a difference, and you will make a difference. And go get them.
Well, that reminds me, our YouTube channel is now up to 31,000 subscribers. We've almost doubled since the last time you were on, and our Twitter's up to 32,000. So, hey, everyone, don't forget to hit the like and subscribe button on this video, and the alert button also. We really appreciate it.
Thanks for having me on.
No problem. Thanks,
take care, Ed. Take care, everyone.